All right, let's get right into it. A massive new tax bill is about to completely change the game for your 2025 taxes. We're talking about the One Big Beautiful Bill Act. And believe me, it is packed with new rules that could seriously impact your personal finances.
So here's the big question, right? Are you actually prepared for these changes? So many people miss out on deductions and credits just because, well, they don't even know they exist. We're going to make sure that doesn't happen to you this year.
In this explainer, we're going to break down exactly what this bill means for your wallet. We'll cut through all the confusing jargon and show you the key changes. From brand new deductions you've never seen before to expiring credits that you have to act on, like, right now.
First up, let's talk about what this means for the workforce. The bill introduces some of the biggest wins for employees and service workers that we've seen in years. So let's dive in.
Now, the most talked about and, probably the most confusing new rule is the overtime pay deduction. You might have heard whispers that overtime is now tax-free, but that's not exactly the whole story. Let's clear this up. Here's the crucial part you need to understand. You can only deduct the premium portion of your overtime pay. So think about time and a half. Your normal pay is the time, right? The part you can deduct is only the half, that little bit extra you get for working longer hours. So the government isn't taxing that bonus pay, but you do still pay tax on the regular pay portion of your overtime. So how do you figure this out? It's actually a pretty simple three-step process. First, just go through your pay stubs and find your total overtime hours for the year. Second, you got to identify your premium pay rate. That's the extra cash you get per hour. So, for example, if you make $30 an hour and get time and a half, your premium is $15 an hour. And finally, you just multiply those hours by that premium rate. Boom, that's your deduction. And of course, you know how it is, there are some limits to keep in mind. The max deduction is $12,500 for single filers and double that for married couples. It also starts to phase out if your income goes over 150 grand. And like a lot of these new rules, it's temporary. It's set to go away after 2028. Now for another huge win, this time for service workers. If you earn tips as a server, a bartender, a stylist, a delivery driver, you can now deduct up to $25,000 of that income. Yeah, you heard that right. So if you earn $30,000 in tips, you can just subtract a whopping $25,000 from your taxable income. The only catch? Just make sure all your tips are properly reported to qualify. Okay, but the new bill isn't just about work. There are some major changes that are going to affect homeowners, families, and pretty much anyone living in a high-tax state. One of the biggest changes, and this is a big one, is the cap on deducting your state and local taxes, or SALT. It has quadrupled. It's jumping from just $10,000 all the way up to $40,000. If you live somewhere like California, New York, or New Jersey, this could literally mean thousands of dollars in real tax savings. And check this out. Here's something completely new, a deduction for personal auto loan interest. For the very first time, you can deduct up to $10,000 in interest paid on a loan for a brand new car. And what's great is this is an above-the-line deduction, which basically means you can take it even if you don't itemize. Just remember, the car has to be new, and this benefit is temporary. It ends in 2028. Okay, I have an urgent warning for you on a really time-sensitive opportunity. The 30% solar energy tax credit is ending, and that deadline is coming up fast. To claim it, your system has to be installed by the end of 2025. And this is a tax credit, not a deduction, which means it reduces your tax bill dollar for dollar. A $28,000 system could get you an $8,400 credit, but the clock is ticking. And the good news just keeps on coming. The child tax credit is now up to $2,200 per child. There's a brand new $6,000 bonus deduction for seniors over 65. The super popular mortgage interest deduction, it's been made permanent. And to top it all off, the standard deduction got a big boost, which automatically shields more of your income from taxes. So, with all these new rules, what does this actually mean for your bottom line? Let's run the numbers and see the real dollar impact for a few everyday household scenarios. But first, really quickly, it is absolutely crucial that you understand the difference between a deduction and a credit. Think of it this way. A deduction just lowers the amount of your income that gets taxed. So a $1,000 deduction might save you $120, or maybe $220 depending on your tax bracket. A tax credit, on the other hand, is like a direct cash discount on your tax bill. A $1,000 credit saves you a full $1,000. It's way, way more powerful. Okay, let's look at the data. We've crunched the numbers for 3 different scenarios.
And for each one, we assumed that each earner had about 10 grand in total overtime, which gives them that $3,300 overtime premium deduction. When we compare the estimated tax bill under the new law to what it would have been under the old one, well, you can see for yourself everyone comes out ahead. For a single person making $60,000 a year, the combo of a higher standard deduction and that new overtime deduction translates to about $400 in savings compared to the old rules. Now, for a head of household with one kid at that same income level, they also save about $400. Their tax bill is already a lot lower because of the child tax credit, but they still get the full benefit of that new overtime rule. And for a married couple with 2 earners and 2 kids, the savings double to about $800. Why? Because both earners can claim that overtime premium deduction, and they get to combine their savings for a really significant drop in the family's total tax bill. Okay, so after all of that, what are the most important things you really need to remember as you get ready for the 2025 tax season? Let's just boil it down to the key takeaways. First, remember, that overtime deduction is only for the extra premium pay, not your whole overtime check. Second, the SALT deduction cap is now a much more generous $40,000. Third, you gotta act now if you want to claim those time-sensitive credits like the one for solar before they're gone for good. And finally, here's a little bonus. You might see a bigger refund next year, simply because your employer was probably withholding taxes based on the old, higher rates all year long.
So here's the bottom line. The government has fundamentally changed the rules of the game. The only question left is, will you change your strategy to make sure you get every single dollar that you are entitled to?